my pleasure and privilege to welcome you all here this morning to our Future Inc. New Zealand tax debate. So Future Inc. is Chartered Accountants Australia and New Zealand's platform for contributing to the debate on developing the national prosperity of both New Zealand and obviously of Australia too. It's fundamentally about identifying the strengths, weaknesses, opportunities and threats that will make the difference for us between a bright economic future and a moderate economic future. The moot is, as I said, that New Zealand's current tax policy settings are unsustainable and a radical rethink is required. And on that note, while you continue to enjoy your breakfast, I will invite Chris, who's not going to put you off your breakfast, to start off by speaking for the affirmative team.
Good morning, everyone, ladies and gentlemen. The moot that the current New Zealand tax policy settings are unsustainable and a rethink is required. Now, debating convention would say that I should go through and define the moot, the tax policy settings, what we tax, who we tax, and how we tax it. Rebecca, I actually picked you as being on the young side, so unlike Peter and his very, very hurtful comments, I'd picked you as sort of the second of the two young members of the team. But I'd also picked up on Peter's theme, which is you're a partner. I mean, you have subscribed to the very system that confuses and confounds the populace. So in that sense, you are a hybrid, and as every revenue official will tell you, hybrids are not to be trusted. Because that is the theme of the affirmative team. That what has worked in the past is not good enough for the future, and right here, right now, we need to face that uncomfortable truth and do something about it. So as the negative team sits there, complacent in their comfort, chanting their mantra of broad-based low rate, the affirmative team is going to open your eyes to what the future holds. And it's actually not even about the future. It's about right now. Things that are happening now that non-digital dinosaurs like me haven't even thought about. Ming Fei is going to look at the changing world, where people create a new way of engaging with each other that blurs the personal and business demarcation lines in terms of the shared economy. Jeremy's going to show you how to the need to address the imbalance in our society in terms of wealth and how the current tax settings are contributing to that imbalance. An imbalance that has become a time bomb ticking with such urgency that we need tax leaders to come forth now and cry, the time for change is now. It hasn't always been a broad-based, low-rate world that we live in. We've had the courage in the past to make the changes. Let's look back to the mid-1980s. But there's a generation of tax practitioners in the room who have only known the system that we have today. Prior to 1985, we had a system that was characterised by marginal tax rates as high as 66%, a totally random sales tax, nothing comprehensive in terms of GST, limited international investment, cumbersome investment regimes and incentive regimes, no imputation, so you had double taxation of company earnings. The response to the mess that New Zealand was in the post-Muldoon era was universally admired. We flattened the tax rates. We introduced imputation. We introduced a comprehensive consumption tax that remains the envy of everyone. We introduced a comprehensive international tax regime that was the envy of no one. But we learnt to change it. Right now we're at a crossroads. And just as Muldoon's controlled and centralised economic model's time had come, so the time has come to change our current settings.
The good thing about a broad-based low-rate system is that it is broad, and the broad bases allow us to not confuse the interactions in the economy and allow us to stay out of people's lives. And in some respects, a good tax system should be invisible and should be in the background. And to use Matt Benger's words, should be boring. A good tax framework should be boring. People should just know it. They should feel it. BBLR should just be the common term that everyone understands. But the whole point of a good tax policy setting is that there aren't decisions made by the tax system that they don't drive decisions, they don't drive behaviour. We'd like to frame behaviour, but we don't want to get in your lives. We'd like you to comply with the most simple way. If you have to interact least with Inland Revenue, the better. It's not that we're not friendly or that we don't want to pick up the phones. We just like you to get on with your lives. We want you to make the money. We want you to spend the money. We want you to go to school and get your hospital care, get your hip replacement, get your, drive your car, go down the road and take your holidays. We don't want to constrain all of that. We just want to make sure that we clip the ticket. So if the government comes up with a situation that we need to resolve because we need more money to spend on something, the option is to increase the taxes, increase the bases, or perhaps cut spending. So it's not always just necessary to introduce a brand new tax to cover additional revenue spend. We could also just revisit the current bases that we have. And the fantastic thing about New Zealand, and quite unique to New Zealand, I'm sure Michael will attest to this as well, is that we have a very, very small community overall. And in and amongst that, we have a very, very small tax community in and amongst that all. So the access in New Zealand to both tax officials and government and the revenue and taxpayers and the tax community is all quite interrelated. But the thing that we forget to remember is that tax administration really underlies and frames everything that we're doing. So if we can make tax collection efficient, we can make the entire tax system cost everyone less. So it's not about do we need a new tax base, it's how do we manage the tax bases that we have more efficiently? And how do we make sure that when you're trying to interact with the tax system, it doesn't become a pain, it doesn't cause you headaches, and it doesn't make you worry about what else is going to happen on the stage show because the backdrop is so awful.
My car is currently sitting in level 6 right now of the Sky City car park. It's going to be sitting there until 8 p.m. tonight when this conference finishes. It's going to be slowly depreciating on me. What if I rented my car out to someone while it's sitting in that car park? I could make about $20 an hour. For the whole day, I could make about $240. What if I rented my car out to someone every single day of my workday that I wasn't using it? I could make up to $600 a week. That means I could pretty much go to Sydney every single weekend for free. This is the sharing economy, or the access economy. However you'd like to call it, the phenomenon of online marketplaces connecting businesses and connecting consumers with consumers is growing by leaps and bounds. We're talking about the likes of Uber, Airbnb, Sidekicker, Snowball Effect, and Harmony, to name a few. In theory, a comprehensive tax system should be readily able to adapt to a changing environment or a changing economy. But with all due respect, we believe that our tax policy setting still heavily focuses on 20th century business models and therefore arguably is too rigid to adapt to the sharing economy. When I checked this morning, there are about 500 New Zealand rental properties listed on Airbnb. How many of these people are applying the mixed-use asset rules? Do they fall within the boarding house rules? How are they accounting for GST? Is their Ponsonby apartment a commercial dwelling, or is it a residential dwelling? New services like this from the sharing economy are likely to go untaxed under the current framework because our current framework doesn't really contemplate the use of personal property for business purposes. And finally, what is a tax debate without a little bit of base erosion and profit shifting? While Kiwis are signing up to the millions of sharing apps out there and providing resources, the New Zealand marketplace obviously has little ability to take a cut, especially from the gains made by these offshore sharing companies. These sharing companies are leveraging off our resources, and us Kiwis, we're able to help them grow from startup companies into billion-dollar unicorn companies. And yet, our national marketplace is left with little ability to take the cut. So hopefully, ladies and gentlemen, I have convinced you that a rethink to some extent is required. The next question is, what are the possible solutions? We suggest that a comprehensive study is done to understand the infrastructure, the business models, and the relationships that drive the sharing economy. No OECD country has released any type of comprehensive study on the impact of the sharing economy. By adopting smart adaptive responses, New Zealand could be a first mover in this space and therefore will be well positioned to harness its economic potential. We could even outsource this recommended study to a bunch of experts via one of the many knowledge sharing apps out there. How ironic. Thank you.
As the team, or perhaps the group hybrid, I'd just like to say that when they're well structured, they can deliver some great results. So be prepared for some wonderful insights. The current New Zealand tax policy settings are not unsustainable, and in our view, no rethink is required. I think it's worthwhile actually just going back and looking at the policy settings in terms of numbers. And New Zealand's government spend as a percentage of GDP is at or around 30%, and our tax take is at the same level. And that, to me, says that revenue and expenditure are broadly aligned, clearly sustainable. So what we need to think about is response to potential increased costs doesn't necessarily need to be constrained to the revenue side of the equation. In the case of the ageing population, we should be looking at the level of superannuation and whether that's reasonable, introducing means testing, and perhaps a need for compulsory KiwiSaver. I do appreciate that in addressing the moot, Chris, Ming-Fei and Jeremy have quite likely been internalising a really complicated scenario and trying to come up with solutions to a problem that really doesn't exist. But let's look at capital gains tax, the fiscal equivalent of ghost chips. We just can't grab them. The key is in the design, and look, we expect that it will be suggested as a means to expand the tax base and address any inequities in the system. We already tax some gains through income tax, FAs, FIFs, property, recently supplemented obviously by the Bright Line rules. But in principle, if we're going to continue with our broad-based initiative, the capital gains tax is going to have to include owner-occupied housing. And given our love affair with home ownership, tax at your peril. And with new measures to expand GST to cover online services, tax policy is certainly demonstrating how well it is keeping step with the evolution of economic activity. The business transformation process is also another example of how we're keeping the tax settings relevant, linking in collection mechanisms directly with payroll and GST, and tinkering with the existing framework of the consumption and income tax levers. Seriously, the best approach is a simple regime comprised of income tax and consumption tax, which supports the broad base application. New Zealand's tax policy settings are currently sustainable and will continue to be so into the future.
It's my job to set the record straight on a number of issues. So Jana has described at length how our BBLR policy settings means that the tax system operates as much in the background as possible. Rebecca has given us a rundown of why we don't need to change our tax policy settings to raise new revenue. Both of these speakers have missed the point entirely. And that is, how do we raise new tax revenue without further exacerbating this growing divide between New Zealand's richest and New Zealand's poorest households? It's no secret that New Zealand faces a number of fiscal pressures relating to increasing demands being placed on our health and social security systems due to an ageing population. By the middle of this century, it is projected that 1 in every 4 Kiwis will be over the age of 65. This is a challenge, however, that's well understood. What is not yet so well understood is what exactly we're going to do about it. The wealthiest 50% of people in this country share between them more than 96% of all the wealth, whereas the poorest 50% share less than 4%. The poorest 10%, in fact, have seen their net debt rise to $7.4 billion. This disparity is only thought to have worsened since that time, given since 2010, when these statistics were taken, because of the recent housing boom and the share market recovery post-GFC. The only viable way forward for us is to seriously rethink, how we can use our tax system to raise new revenue without driving this wedge further between the rich and the poor. The money needs to come from somewhere, and policy options such as cutting government spending on healthcare expenditure or transfer payments, benefits, etc., are ultimately likely to create more harm than good. our preferred option would be to broaden our existing income tax base. Although we tout this BBLR policy setting in our system, the reality is we fall short on this mark in two important respects, and they are the non-taxation of capital gains and the non-taxation of imputed income. Both of these options can make a radical difference in an area that's central to the wealth equation in New Zealand, and that is housing. Home ownership has traditionally been viewed in New Zealand as the path to financial independence. Housing makes up a staggering 60% of total household wealth in New Zealand, with owner-occupied houses representing 48% of this figure. If we are going to continue to rely on housing as a means of wealth accumulation for young New Zealanders like myself, and I'm sure many of you, then I think we have a responsibility to make sure that the tax system treats this investment in as neutral way as possible. Renters, as a demographic, now make up more than half this country. Those of us who are stuck in generation rent are quickly becoming the majority, and I think we will very soon see the beginnings of a strong public sentiment for change. According to one estimate, a tax on imputed rents could increase the tax take by around $6 billion per annum. This has to be our best way forward in terms of helping our economy reach that point of fiscal sustainability without further entrenching this trend of wealth inequality into future generations. Thank you.
What are some of the things I really like about the New Zealand system? Well, it starts from the top. We had dinner with Todd McClay last night. Impressive man. Knows his stuff, spoke very confidently about tax policy, and gave us some very good insights into the thinking at the government level. We're trying very hard to have tax reform, and we're not doing a very good job about it. Nearly every day some report will come out about, no, you can't put this sort of tax on. Oh, yes, we should have this tax. So it's remarkable to us when we see 2010 New Zealand do all the things that you did with tax reform. And Todd McClay just said to me last night, he said, we got on with it. We made a decision. We told the New Zealand people that we were going to do this, and we did it. But next layer down is the IRD and the Treasury officials here. We really, really, really like your officials' papers. We like the way in which you have this process that you talked about. We think that's great. And, we read those reports with great interest. Capital gains tax from the last speaker. Be careful what you ask for. It's introduced enormous complexity into our tax law and is a boon. It's a boon for tax practitioners. It's a lot of work in CGT advice, but you've got to be very careful about the complexities that it introduces into the system. I mean, if the best we can come up with from the affirmative is a fat tax, obviously I'm opposed to that. Just think about it. One hand they're talking about inequality, next minute they're knocking the people who go down to KFC and have a supersized Coke. You know that's going to kill your fun on the weekends. What we've decided to do in Australia is with taxi drivers, Uber, what you do, you get the ATO guys love doing this. It's like sport. They ring up the Uber, say, they book a car, and the Uber guy turns up, and then you issue them with an amended assessment. I used to be an ATO auditor. This is great. Normally you have to go and find the taxpayer. With a sharing economy, they come to you.
New Zealand is, as the whole world is, moving towards a more digital world. And the cool thing, as Ming Fei pointed out, is that maybe people can offer new services through apps, and maybe we can even seek good tax consultation through apps. We could put out a GTPP tax policy app where you can just tweet us your thoughts. The other thing that, as Michael pointed out, is that technology can also be used for better enforcement. If we can get you to give us your consultation, your thoughts on apps, we can also get you to declare your income via an app, and maybe we can get you to register for an ID number via an app and all sorts of things. So just because technology is available to the world and might be changing the market doesn't mean that we can't keep up. It just means that we also need to tap into that. In terms of trying to tax wealth, I mean, my perception is that we have a pretty good system in terms of collecting a lot of revenue from a lot of the high-earning people. If you look at our PAYE statistics, if you divided the whole PAYE collected, the 40% of the entire tax take, as I mentioned, into three equal slices, you'll find that the top third of people who earn pay for roughly 2/3 of the whole take. So we really are collecting quite a lot from people who earn a lot. And to leave you on the point that that Winston Churchill, his wise words, was that a nation trying to tax itself into prosperity is a little bit like a man standing in a bucket trying to lift himself up by the handle. So thanks very much.
There you go.
Had the affirmatives proposition being that we need to be more like Australia, then there may have been some relevance in Michael's diatribe. It was never our argument. I've got 2 minutes. That's all they've given me to summarise the compelling case as to why the policy settings for New Zealand need to be rethought.
Here, here.
I have 2 minutes and a man who can't tell the time. I mean, 2 minutes, he's got to be dreaming. Because I know I am. I have a dream. I have a dream where our tax system will enable sustainable health and environmental policies that contribute to the well-being of all New Zealanders. I have a dream that when the people of this country act for the collective good in a sharing economy, they will not be fiscally frustrated by the red tape of a system not fit for purpose. I have a dream that the tax leaders of this country will once again rise and act with the courage and the foresight they displayed 30 years ago. I have a dream of a future where the wealth aspirations of my young colleagues can be attained not by the balance sheet of their parents, but by the quality and the fairness of our tax system. So to you, the tax policy leaders of New Zealand, as you leave this hall to commence the conference proper, a conference whose very theme is inform, debate and innovate, ask not what your tax system can do for you.
Mr. Speaker.
Ask what you can do for your tax system.
What we're going to do now is ask for your views. So as I mentioned before, the app, hopefully many of you have downloaded the app. We're now going to poll you with a couple of questions about what you think of these two superb teams and what they've argued this morning. Okay, so if you've got the app, the first question is, which of the two teams do you think won the debate? So put your answers in. Okay, so we'll stop there. We'll see the results come up on the screen. Well, it looks like a fairly clear victory for the affirmative. Sorry about that to the negative team. You did have the harder argument to run, and you also had Michael Croker on your team. So I think that those results speak for themselves. So thank you very much for participating through the app. We haven't got time to let the old people vote by hand, so we'll just take those results as given. So on that note, a huge thank you to the debaters who all did a superb job, and so to Chris, Meng Fei and Jeremy on the affirmative team, to Slajana, Rebecca and Michael on the negative team. We're all hugely grateful for the effort you've put in and for entertaining us this morning.